What is up, guys? Welcome. Today I'm gonna give you my overview of the S&P 500 and one trade idea. I'm gonna try and keep this short and simple so I can keep cranking these out. So this is the S&P 500. We're gonna look at the daily. See, right now, we are obviously kind of in a downtrend, and we're looking at Bollinger Bands, and this is below the 95% expected move or the second standard deviation. So is it a time to buy right now? Well, let's take a look and see. I like to look at the 5 minute. I like to look at the volume. We are loading. Here we go. Now, I don't see, so these bars setting at the bottom are your volume bars. I do not see anything exciting here. This all just kind of looks like nice and orderly sell off. It's like boop, 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 boop. It's just stair stepping down. If I wanted to go long this, I'd want to see that's your 9:30 a.m. volume bar. Um, you're always going to have big volume at the open and the close. So today didn't look very big in comparison to the close yesterday. But I want to see a big bar in the middle of the day. Like in what I'm scrolling my cursor over, that's your volume bars. That's what I want to see. I want to see some kind of shock or surprise telling me, okay, banks and institutions are now fading this move. Like right here at this time on this day, you saw that's a little unusual. I want to see something really big and unusual. But you can see this volume bar happened. They kind of trended and trickled up. I'm just not seeing that right now, so I'm not really excited about going long S&P. So we look at the daily. It is trending down. It is below the expected move, but I want to see bank and institutional volume fade this down move to start taking it back to the upside before I would go long that. Now, what I did find today, my trade idea of the day was Humana. I think it's Humana Healthcare or Humana Insurance or something like that. Yesterday it was outside the expected move, and if we look at the volume, we did find yesterday. Wow, would you look at that? Now SPY trades like millions of shares of volume. We're looking at volume right now. You can see 9,000, 6,000, 7,000. So it trades much less, but we don't care about just the volume. We care about the relative volume. So right here you can see 49,000, right? So we had a big sell right here, and we started to trickle down today, and I tried to get filled on this yesterday. I'll show you that here in a second. Today, we had volume here at 950. We go and look. This company typically doesn't have big volume on the open for whatever reason, but it usually has big volume at 4 at the end of the day. So, you had, some red volume here right after open. It looks like that was normal for yesterday. And then again, a big sell, 1125. Right around 11, we started to sell really hard on the volume side. I'm not too concerned about the price action. I'm concerned about these Bollinger Bands, the standard deviations, if we're inside or outside the expected move. On the daily, we are headed down from being outside of this expected move, and we have the bank or institutional volume following this. So I kind of scanned the market today. This is so far the only thing I've really found that's too exciting. So I'm just kind of watching this. I got shorts at this white line right here. So we had this big volume. I waited for kind of like a pullback. Right after the sell, we didn't get much of a pullback. So it came back up, tapped our blue line, which is our 20 period moving average. And I was like, okay, I can short it now. So we tapped it, and then now it seems like we're heading back down. We can check on this position real quick. This is the position I'd opened. Oh wow, look at that, 655. I got filled, let's see, at 585. So if we look at my account, Humana, oh look, $85. I probably want to go ahead and slap that real quick, get out, because this is a really quick trade. A trade I did, 495, 870. The intrinsic value, I tried to eliminate my theta decay because this is a 2-day 2-day contracts, meaning they expire real quick. I wanted like heavy gamma exposure. So when there's a move, like we can see right here, I pulled money really quickly. So that is why I bought bought the 495 put to open, sold the 480 to open. So that gives me, there's $15 in that spread. Every dollar is $100, so it's a $1,500 spread. I paid $585 for the spread. So if it were to expire below $480, I would take that full $1,500 and I only paid 585 for it. So the reason I would use a spread is to eliminate some of the theta decay. Let's look at the trade again. So there's like $80 theta decay there. It's taken out, and by going in the money, this option has some intrinsic value. If it's trading at say 49.50 right now, the intrinsic value of this is 500 plus 50, so $550. And then okay, yeah, I really need to. I'm gonna pause this video and probably try and close this out. Okay, so we are back. I didn't close out this trade yet. I like doing these videos because it makes me like, whether anybody's getting anything from this or not, it's like helps me to be more on top of things. But I just switched to the 4 hour. We're looking at the 5 minute. And I was just checking before I sold out of this thing. I was like, well, let's give a reason for why I would sell out. And I didn't really have a good reason, but now I had to make a good reason. So we switched to the 4 hour. We're just checking like supply and demand or support and resistance. You can see, so now we're on the 4 hour. So the light shaded blue areas are your pre-market and aftermarket. Your dark shaded areas are the day of the trade. So we can see we had like a supply and demand support and resistance right here that it broke through, looks like today. So this now becomes new resistance. It was support, it broke through support. And it looks like our next level would be right here at 486. Yeah, right around 486. We can check this. We have a tap there on these candles. We can scroll through. We have tap, tap, close to the tap. Let's see. We come through here. It looks like where I bought in, that was like an older resistance support. We scroll back through the upper level. So every time you see candles tap these levels, look, so that's the level we're looking at right now. And if you can hear my kids, I got kids upstairs. Anyways, that's a strong. I'm gonna pause. Okay. Anyways, here we go. You can see this level right here is the level we're looking at now for it to revisit. That's another strong area. So these levels just show you, where people are buying or selling. Typically, larger volume comes in, and I just picked the levels that we are dealing with and working around right now. And ooh, it looks flat, so maybe it's good. Maybe it means it's down. Yup, it's flying down. So now I can justifiably say, hey, you know why I didn't sell it yet? Because I'm waiting for it to come down to 486. Let's check where the spread's at now. Oh look, we're at 635. I went ahead and set a sell order at 675. I should probably increase that perhaps. Let's see, we're up. Humana, $53, good stuff. These are all my open positions. Are we at 10 minutes? I'm trying to keep these like under 10 minutes. Celsius, you see P&L open 408. That's just on one of these spreads because I never moved this spread, but I kept rolling and selling this. So I actually only have like maybe like $150 risk left in this iron condor. But it looks like I have a loss because I haven't moved my put side yet. So, but I can keep rolling and receiving credit, and yeah, there you go. So I just felt like I had to justify a $403 loss. It's not actually a $403 loss. You can see over here. Here, let's go. Celsius, CEL. So in the platform I'm trading on, I'll leave a link below in the video description. Use my reference link. Thank you so much for doing that. But yeah, I started this spread right here. I shorted the 210 call, sold it for $360. This was my mistake. I sold the put to make it an iron condor for $150. Now that's the one that's at a $400 loss, but that's okay because I received 360 plus 150, 150 plus 175. It puts me somewhere around like $850 credit received with $1,000 risk. So that would put me around $150 left in risk because I kept selling it to them. So it's really not that bad of a position. If we come back, Celsius, we're almost at 10 minutes. This yellow line is I make like say like $850. If we end on this yellow line, I'll probably close somewhere in here in between the two red lines. And as close as we are to the yellow line, I make closer to $850. As long as we're in the red lines, I'm in the green on this trade. So it's kind of a neat trade. I shorted the 210s here. I shorted the puts here, and you can see it just tanked. But as I rolled my spreads, I remained profitable or not in too bad a shape. So um, again, Tasty Trade is the brokerage I use. Link below in the video description. Thank you guys so much for watching. Oh, I caught a fill. Well, we got to look at that now. So there. I should have had cojones. I should have followed whatever I said. I did get the fill. Apparently, it's 675. That was kind of neat. We were watching it and it happened. Let's look. Let's see what happened to CELH, or what was it, Humana? Boom. Did it like tank dramatically? I'll be mad if it did. Not really. It just fell a little bit. That's why I like the 2-day spreads, because we have that gamma exposure. Meaning, if the price moves, the spread moves a lot. And I sold it, or I bought up in the money to eliminate theta decay, and sold the bottom side to also eliminate theta decay. Because when you buy and hold options, typically you always lose. But yeah, keep watching the channel. You'll learn more and more about that. The best way to do this stuff and to learn about it is just kind of watch somebody do it, and you can see what I do on a day-to-day basis. So thanks for watching, guys. We made it in under 12 minutes. Subscribe, like, thanks, and I'll see you in the next video.